This is the Value Investor Podcast with Tracy Reinick. All things value, all the time.
Welcome back, value investors. So this is October 2024, and it's an important month because the new edition of Ben Graham's The Intelligent Investor is rolling out this month, and I'm excited about it. I haven't put in my order yet, but I will. And we will be covering any new info in the book, which I'm expecting there to be quite a bit on this podcast going forward and probably into 2025. Because remember, the older edition is about 600 pages. I'm sure this newer edition is probably similar because it includes both Ben Graham's original book from the 1940s, but he himself updated it until just before his death in the 1970s. And then we had a new updated version about 20 years ago. And that one is the one that is now being updated again. And so it has been 20 years. And I was even talking about, why aren't they updating it? And then suddenly there it was on my Twitter feed that it was finally, coming out with this new edition. I guess they didn't want to give us a long lead time heading into it, maybe, because I'm not sure why. It is one of the best books on investing. It is the one that Warren Buffett said was the book that changed his life. He read it when he was still, I think, like 19 or 20, and he was kind of just speculating in stocks at the time. And then he read The Intelligent Investor and realized, like, wait, whoa, there's other things I could be doing, and there's these methods that actually work. So the co-author now is Jason Zweig from the Wall Street Journal. He has a column over there, but he did the last edition. I guess this is now the third edition. And now I see it has actually come out now. So launch date was October 22nd. And I'm trying to look, it is still 640 pages. So it is still as long as it always was before. And I'm looking forward just to the updated examples because we did get some from the dot-com boom the last time it came out, but the dot-com boom was, 25 years ago now. So it'll be nice to get maybe some examples from the financial crisis in there and whatever else has been going on, even the pandemic years since that edition came out. So in honor of this new book coming out, I wanted to take a look at stocks that might be like Ben Graham stocks and also his protege, Warren Buffett. Because if you didn't know, Warren Buffett actually worked for Ben Graham at his investment company, but Ben Graham was also a professor. Buffett took his classes. So, and Buffett gave the introduction to the prior edition in the Jason Zweig one. And I don't know if he's done the same in this new one or not, but we'll see. I'm not sure if he's given that intro again. But in honor of all that, I wanted to run these screens based on both Buffett and Ben Graham. And in the Zacks More Advanced Research Wizard product. This is not on Zacks.com in our normal screening, but Research Wizard is our more advanced screening product that industry professionals use, financial advisors, people like that. And I have access to that too here at Zacks. And I know that there's some very interesting pre-made screens on there that are very good for those of us value investors. I've talked about them over the years on the podcast, but I haven't covered one in a while. So I went over there and I ran the screens that we had on Ben Graham. We actually have a Ben Graham screen. And if you recall, if you have listened to the one where I have run the screen in the past, the interesting addition in this screen is that it has a dividend yield. I'm not sure why they included it because I just get the screen and put it in, but this Ben Graham screen is a little different than some of the other value screens because of that dividend yield. So I'm fine with that. I like getting a dividend yield. Cheap stocks with dividends, what's not to like? So that is what sets that screen apart a little bit. And then the Buffett screen always seems very narrow. Every time I've always run it, there's been very few stocks in it. Sometimes there's been zero in that screen. So I knew I would probably have to do both screens, and that turned out to be the case. So I ran the Buffett screen first, just curious to see what was in there. And there were only 2 stocks. I am going to talk about both of those, however, on the podcast today. And then I ran the Ben Graham screen thinking, maybe I might get 9 or 10 stocks, but I got 18. So that was a nicer screen. That's a good amount. One of the stocks, I believe, that was in the Buffett is also in the Ben Graham one. So that makes some sense. But otherwise, it's just some cheap stocks in the Graham one. And I paid some particular attention to the PEG ratio because that's Ben Graham as well. But again, the 18 stocks in the Ben Graham screen have the dividend. And the Zacks rank was not part of either of these screens. But hopefully, the rank isn't too terrible. There is one I'm going to talk about that's a number 4, which is the sell, but it's in oil. So the earnings estimates are coming down and being cut on the oils, but the oils are also cheap and we're waiting for the next earnings reports to come in. So there's a lot of factors going on this week while I'm recording this. Some of these companies haven't reported earnings, but are about to. So that could change things a bit as well, even, with the stock valuation and everything else. So let's just dive right into some of the stocks because that's what we're all here for, right? So let's dive. Okay, so I'm going to start with the Ben Graham stocks first. And the first one I want to talk about is called RPC Inc. And the ticker is R as in Robert, E as in Edward, S as in Sam. So the ticker really has nothing to do with the name, which is RPC. This always annoys me on this one because I just want to put in RPC. Someone else must have that ticker. Not sure why they are RES, but this is an oil company. They're in the oil field services side, but U.S. only, Gulf of Mexico, the Southwest, Appalachian, and Rocky Mountain regions. So U.S. only, they're not like SLB or Halliburton Global, U.S. only. And so this area will do well when, they're pumping more and there's a lot more drilling going on. And so for right now, the analysts are cutting estimates and 2024 earnings expected to be down 43% as the price of oil has come down. Some of the production has come back down as well. So this isn't really surprising. Still expected to make 55 cents. And then next year, analysts a little more bullish, but one estimate has been cut for next year too. And so still looking for 21% earnings growth for next year to 67 cents. But we'll see if that holds after the next couple of earnings reports, right? Because crude was under 70 for a little while. And so that's got to be hitting the oil field services as well. And you can see it on the 90 days for next year. 90 days ago, analysts were looking for 106 and now it's down to 67. So that's quite big estimate cuts there. But this is a smaller company, market cap of 1.4 billion. The PE is just 11.4 right now, but a little bit of value trappiness there, right? Because those estimates are coming down, although is expected to see a turnaround by next year, but we'll see. Dividend yielding 2.5%. So that fits in with the Ben Graham model. This one has no PEG ratio on Zacks.com, so I can't really comment on that. It is a Zacks number 4 sell, though. And that's because the one estimate is being cut. We only have one estimate in the system. And so it's in agreement with itself that things aren't looking as bullish. So, but earnings still to come, even the week I'm recording this. So make sure you check and see what they said and how the earnings came in for any of these stocks right now, the end of October, because this is a busy time for earnings. So that's RPC Inc. RES is the ticker. Okay, the second one is also in the commodity space, but it's a gold company, and it's Centerra Gold, ticker C as in cat, G as in George, A, U, CGAU. It's in Canada, and they're headquartered in Toronto. 1.6 billion in market cap. They do both gold and copper in North America, Turkey, and other markets. PE of just 9.0 and dividend yielding 2.7% as gold is at record highs. So as long as these miners can get it out of the ground, things can look pretty good because their cost to get it out of the ground is a lot lower than the $2,700 an ounce that gold is right now. So even on the earnings on this one, they only made 5 cents last year, expected to make 84 cents this year. That's 1,580% earnings growth. Next year, though, a little lower, down to 61 cents. That's a decline of 27%. But we'll see when this earnings report comes in. They haven't reported yet either. So, yeah, I like the miners here. This is a Canadian one. You need to tune in, see what their costs are, see if they're getting it out of the ground, see if any of the mines are having issues. All these things come into play, but I like these, and it was in the screen. So Centerra Gold, ticker CGAU. Then I did choose a Chinese stock. Yes, occasionally I do choose them for this podcast, even though I'm not a big fan of China, but sometimes they're so cheap that you can't really look away. So this one is Auto Home, and it's ticker A as in Adam, T as in Tom, H as in Harry, M as in Mary, ATHM. And we have talked about this one in the past because they're an online automobile portal, basically in China, that has some AI generated content. You go on to find out about the cars. I think you can buy the cars on there. I'm not sure, but it's basically like online cars. So this one is cheap, PE of 13.4. Dividend is yielding 5.5%. I'm not sure if that's a variable or how, built in that one is for it to be that high. So make sure you check on that if you are interested in it for the dividend. And I'm taking a look. It's also a Zacks number for sell, but it hasn't reported earnings yet. Market cap of 3.7 billion, so pretty decent market cap. I do like Chinese companies that pay a dividend and more than just a few cents because that's real money and it's going into my bank account. So at least I know they're making some kind of money to send it to me. So I like that aspect. They also have a share repurchase program, a $200 million share repurchase program as of September 4th. So I'm also liking that. That's real money that they're spending on the shares. So that's Auto Home. Check in on that earnings report. I guess it's coming in November, it looks like, from Auto Home, ticker ATHM. Okay, so those are 3 Ben Graham stocks. We're going to turn to the Buffett stocks now, and no one should be surprised. A home builder is one of the two. And it's KB Home, in this case, ticker KBI. And this is one that was also in the Ben Graham screen, KHI. Wait a minute. KBH. Why do I have an I in there? Oh, I know, because the other stock that was not in Buffett, but it was in Ben Graham for the home builders was DR Horton, which is DHI. So I just did a combination on the ticker there in my notes, but KB Home is K as in Kathy, B as in boy, H as in Harry, KBH. And they are on the fiscal year. So they last reported fiscal third quarter on September 24th. It was another good quarter. We know kind of what's happening with these big home builders right now. They remain cheap. It has a PE of 9.3, a PEG ratio of 0.7. Market cap on KB Home is $5.8 billion. They operate in 47 markets. They are pretty heavy in the Western market, especially California, because that's where they're headquartered. And dividend is yielding 1.3%, even though, well, I guess this was in the Graham. This was in the Graham one, so that's why it's got the dividend. Also, they have a massive share repurchase plan going. I think it was $1 billion originally, and they have $800 million left on that authorization as of August 31st, 2024. And they bought like 5% of outstanding shares just this year, I think it is. So they're really spending a lot of this free cash flow that they're getting on both dividend and share repurchase. So if you like those things, check out KB Home. But otherwise, earnings still looking pretty good on these home builders. And with the mortgage rates expected to come down, that should help their gross margins. And that should mean higher earnings. So just looking for this fiscal year, they're looking for earnings growth of about 20%. And then next fiscal year, which is a couple months away still for them, will be 9.5% right now from the analysts. 3 estimates are higher for fiscal 2024, 2 are lower in the last 30 days since their last earnings report in September, early September, or no, on September 24th. And then 2025, more agreement for the next fiscal year with 5 higher. Nobody's lower on that one. And the estimates are trending higher once again on the home builders. So home builder story still going on, still cheap. Berkshire Hathaway did own some of the home builders, but they've gotten out of those. I'm assuming that was the lieutenants. I think they still own NVR, but none of the others. But this has been a multi-year play now, and we'll see if it continues. But shares still cheap, as I mentioned, with that PE of just 9.3. So that's KB Home, ticker KBH. The other one was DR Horton in the Graham screen, ticker DHI, if you want to check that one out. Okay, and then the final Buffett stock, because there was only 2, is PERI Network, ticker PERI. P as in Paul, E as in Edward, R as in Robert, I. And I'm not sure if I've covered this one. We've covered a couple of these digital advertising stocks. I'm sure I have at some point because these are all cheap, but it's been a little while since I think PERI was on the podcast. But market cap of just $384 million. They call themselves a premium digital advertising technologies ecosystem. They're in New York and Tel Aviv. So what's hammering these digital advertisers is the search. Search is down big at a lot of them. And for PERI in last quarter, they aren't out with their new quarter yet, but in the second quarter, search advertising was down 52% to just 34 million. But retail media, that spiked up 75% to 17.6 million. And now they said their technology has been extended to YouTube CTV, and CTV was up 42% to 10.2 million in the quarter. But overall revenue in the second quarter down 39% to just 108.7 million from 178 million a year ago. So this is why these stocks are cheap. And people pretty much, jump ship on a lot of these digital advertisers because it hasn't really started turning around yet. But maybe we're seeing some glimmers of this with some of their areas that they're trying to make a push in. We won't know until early November. That's when they report again. PE is dirt cheap at 6.2, PEG ratio of 0.28. But again, small cap, 384 million market cap. This year, 500 million in revenues. Next year, analysts have 468 million. So still a decline of 6% for next year. Earnings down 60% this year. They made $3.33 last year. Now $1.31 is expected. And then next year down another 6% to $1.22. So might not have hit the bottom yet. And that makes me a little nervous here when I'm looking at the, the cheapness and also whether or not, when I need to get in. Because it's going to be cheap, even if I decide to get in, a little bit late after the bottom on all the earnings and the data. But right now it's a number 3 hold. Again, it hasn't reported yet. So the analysts haven't really changed anything or, they're waiting. They're waiting, like I said, I was waiting for the next earnings report to kind of see where things stand in this area. I'm trying to look to see. I didn't care so much what the stocks were doing for this podcast episode, but the chart does not look good. So let's get year to date. Year to date, it's down 74%. So that's pretty dramatic now. The S&P 500 is up 22. So that's pretty dramatic. It's not gone back all the way to the pandemic lows. It's still hovering above the pandemic lows, but not by much. So huge spike in these digital advertisers during the pandemic when we were all online. And then since 2023, this stock has peaked in April of 2023. It's been down since then. And like I said, over the year to date, down 74%. So we're getting there. We might be getting to the bottom soon. So I'll be tuning in to a stock like this to kind of see what they say on this next earnings report, to see if maybe the worst is over. But I'm going to be on the sidelines probably until I see something a little bit better than what's in these numbers right now. But something to keep on your watch list, that's PERI Network, ticker PERI. Okay, so those are the value stocks that showed up in the Buffett screen and 3 of them from the Ben Graham screen on our more advanced Research Wizard platform. And we're waiting for that Intelligent Investor book to come out. I'm going to have to take, a real long vacation to try to make my way through that. But as I've done in the past on the podcast, when we've covered the Intelligent Investor, I've just taken it chapter by chapter. And that's also what I recommend for anyone reading it for the first time. It is a little bit dry, the old Ben Graham chapters, but that's why I'm excited about Jason's newer chapters, and they're updated. So I don't have to keep reading about the dot-com bubble anymore in his chapters. And that's what makes the book even better, with the combination of both Ben Graham's great advice and also Jason's. And it's been timeless. I mean, the book has been out a long time now. What was the original? 1949 was the original publication, and it still makes sense today for investors. So we're going to be diving into that as the weeks go on here, and we're going to have end of the year podcast coming up. Yes, the end of the year is fast approaching. I know, it's crazy. And I always like to see where things stand with value stocks as we go into the end of the year. But it's been a good year for us value investors. I mean, even if you just bought the home builders over the last year, you've been crushing it. So it hasn't been all just expensive AI stocks or technology. There's been a lot of good value plays that have busted out as well. So we're going to cover all that and more. Be sure to subscribe. Get us on Apple Podcasts. Get us on Spotify. Get us on Amazon Music, anywhere you can get podcasts. And let me recap the stock tickers again. in case you missed it the first time. So we had RPC Inc., which is the oil services. This is a Ben Graham stock, ticker RES. We had the gold miner from Canada, Centerra Gold, CGAU. We had Auto Home from China. I'm just realizing now that this is like a very international group of stocks this week, ticker ATHM. Then we had the home builder, KB Home, ticker KBH, and then PERI Network, ticker PERI. And again, make sure you subscribe to get us every week, and I'll see you again next week with some more value stocks.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.